Okay, now can we discuss about the structure now? This is the most important part. So budget you can take along with me, you can see this. So there are two parts divided into receipts and expenditure. So mainly two parts, okay? So it is divided into two parts, receipts and expenditure. All the three are in India. I've told you all the three are adopted in different years, right? So all the three are there. So receipts and expenditure. So receipts are of two type. Revenue receipts. I will tell you what you mean by revenue receipts, okay? So just write revenue receipts and then capital receipts, okay? And then expenditure also, revenue expenditure and also capital expenditure, okay? So budget I am dividing into two, receipts and expenditure. Receipts, revenue receipts, capital receipts. Expenditure, revenue expenditure, capital expenditure. Now we will see what are, first we will see what are capital receipts, okay? So see, whenever we are discussing about capital receipts, capital expenditure, it is having something to do with assets and liability. So just remember this word, assets, liability. So any expenditure which is connected to assets and liability, it is capital expenditure. Similarly, anything related to assets and liability in case of receipts, it is capital receipts. So in case of capital receipts, if you see, what will happen? Assets will decrease, right? Assets will decrease. Like when you get the money, some assets will be reduced, right? Because you are selling something like disinvestment, sale of assets, etc. So assets will decrease in case of capital receipts. Or the other way you can write as liability will increase. What do you mean by this? Like borrowings, right? So here government borrowings. See, receipts means you are getting money. Now see the sources in which government can get money. First, government can sell the resources. So selling means assets are reducing, okay? Or government can borrow. When you borrow, liability is increasing. So those are two ways in which you can understand capital receipts. Asset will reduce, liability will increase. Now think from this perspective. If you see assets reduced, what are they? First you can write disinvestment. Okay, so disinvestment proceeds. So disinvestment proceeds, and you can also write sale of assets. So sale of assets, in all these what will happen? Government asset is reducing, but government is getting the revenue, right? Or the income is there, money is there. So that is why receipts, there is an income, okay? So money is getting, that is why receipts. And since assets are reducing, it is capital receipts. Then recovery of loans. Okay, recovery of loans. So all these are part of capital receipts. Similarly, when you talk about the liability, you can say mainly borrowing. Okay, now borrowing will be of two types. That is firstly internal borrowings and also external borrowings. Okay, so liability increasing, that means borrowing. So when you generally say borrowing means what? It is liability. So if it is liability, when you borrow you get money. So liability and you are getting money. So getting money, receipts, liability, so capital. So that is coming under capital receipts. Now what is internal? Internal means from the general public, right? Government can borrow from general public. So this is actually the second highest borrowing, okay? And then government can borrow from banks, financial institutions. So this is basically the largest source. Or government can basically borrow from RBI. That is what we have discussed yesterday, deficit financing. Simply borrowing from RBI is actually deficit financing, because RBI will print money and will give it to government. So that is deficit financing, and we have discussed yesterday that it is not supposed to be done. Even the structural adjustment program of 1991, we have discussed this. Otherwise also we have discussed this in different context. Okay, so these are the internal sources. What about external? That is easy, right? It is bilateral and multilateral. So bilateral means between governments, right? Bilateral. Multilateral means like IMF, World Bank, etc. So multilateral. See, so what you need to know is when we discuss about capital receipts, if it is capital, how to connect? It has to do something with assets and liability. Okay, now if it has to do something with assets and liability, here it is receipts. Receipts means you are receiving. So when you are receiving means, now you take it in that way, receiving means it will come under receipts. Okay, so you are receiving, so it can be borrowing. Okay, if it is borrowing, liability will increase. That will come under capital receipts. Why borrowing is coming under capital receipts? Because liability is increasing. Okay, so here assets are decreasing. Here also money is coming. Okay, receipt is receipt because you are getting the money, but assets are reducing, so that is again classified under capital receipts. So here recovery of loans, but not the interest. Okay, so interest will be added under revenue, that I will discuss soon. Right now itself I will discuss. So here only the principal will be counted here in capital receipts. What about capital expenditure then? It is exactly the opposite, right? So let me write it here. What is capital expenditure? What will happen with assets? See, here it is spending. Expenditure means you are spending. So what will happen with assets? Assets will increase or decrease? Government is spending on assets, so asset will increase. Okay, or liability, what will happen? Government will be spending on liability. That means government is spending on liability means government is paying the debt. So liability will decrease, right? So liability is decreasing, assets increasing. That is what capital expenditure. That is the reason why we are saying capital expenditure is so good. Capital expenditure is considered as better. Why? Expenditure is there. You can see government is spending, but it is productive because asset is increasing, or liability, government debt is decreasing. Okay, so in this context, capital expenditure is considered as really good actually. The revenue expenditure is considered as problem. Capital expenditure is good. So liability decreasing means I will discuss soon. Interest, here only principal amount will be coming under the capital expenditure. The interest will be coming under revenue. Now here assets increasing. What does that mean? Government spending on infrastructure, expenditure on infrastructure. Okay, or what about nationalization? Nationalization means what? Government is buying the shares, right? So when we discuss about nationalization, government is buying the share of the private company. So assets are increasing or not? Assets are increasing. So nationalization. Okay. Then loans, giving loans. Okay. So loans, if you are giving, that is an asset. Okay. So that will be, earlier I was talking about taking loan, here giving loan. Or purchase of any assets. Purchase of assets. So all these will actually increase the assets, so capital expenditure. Decrease the liability because you are repaying the loan. So this is what you mean by capital receipts and capital expenditure. So capital receipts means what? You are getting, you are receiving, so receipts. Why capital? Because assets and liability. Assets are decreasing, liability is increasing. So it has to do something with asset and liability. So the ultimate question to decide, if you see any of this in your option, how to know whether it is capital or revenue? You just check whether it has to do something with assets and liability. If it has to do something with asset and liability, that is coming under capital. If it has nothing to do with asset and liability, that will come under revenue. Okay, so let me make it very clear again. When we talk about government borrowing means what? Are you getting money or are you spending money? Or are you giving money? Borrowing. It is you are getting money, right? So getting money means what? Receipts or expenditure? Receipts. Now, here when you government is borrowing, what will happen? Here the liability is increasing or not? Liability is increasing. So what receipt it is? Capital receipt. Similarly, when you are selling a PSU, what you get? You get money. So that is what? Receipts, right? But what will happen with your asset? Here your assets decreasing. So is it again capital? It is again capital receipt. Are you getting me? Another example, if you talk about taxes, you are collecting taxes, you are getting money from taxes. So it is receipts. So here there is no question of assets or liability. There is no asset decrease. There is no liability increase also. So it is revenue receipts. Money which is getting from the taxes, it is coming under revenue receipts. We'll discuss that soon. What about infrastructure? When you are going for infrastructure development, infra creation, it is expenditure. But when we talk about infrastructure, it is an asset or not? It is an asset. So asset increasing. So it is a capital expenditure. So how to know whether it is revenue or capital? It has to be compared with asset and liability. If you are receiving, it is receipts. If you are spending, it is expenditure. Now the question is whether it is revenue or capital. How to know that? You will see what is the change in asset and liability. First one, the most important one, interest payments. I've told you before, interest payments. Okay, interest payments is coming under revenue expenditure. So interest paid upon the loan that you have taken. What about you are giving loan and you are receiving interest? That will come under where? If you are receiving interest, where it will come?
Revenue receipts.
It will come under revenue receipts. Okay, so interest will come under revenue. So if you are paying interest, revenue expenditure. If you are receiving interest, it is coming under revenue receipts. So it is interest payment. See, almost 1/5 of the budget is actually going for this. Around 18% is actually for interest payment because the debt is so high. Okay, so debt is around 50% of the GDP. 50 to 60% of GDP is the debt. So that is the reason why this is the major part. 1/5 of the budget is actually interest payment. Second, subsidies. Subsidies we have already discussed in detail. So in the module of agriculture, we know all types of subsidy, problem with subsidies. Okay, so third one, salaries and pensions. Third one, salaries and pensions. Okay. Fourth one, defense expenditure. Defense expenditure. See here, when we talk about defense expenditure, you may think that infrastructure is also there, right? Okay, but the major part is revenue. Here, in the defense expenditure, the major part is revenue. So, as per convention, defense expenditure is actually added under revenue because 2/3 of the defense expenditure is part of revenue expenditure, clearly related to revenue. Some infrastructure is also there, but entire defense expenditure is coming under revenue expenditure. So there should not be any confusion here. You may think that some infrastructure is there, so this has to be something which you need to remember. All these you see, you can understand, but this is something which you need to remember. All these you can connect logically. Next you can write expenditure on civil administration. Expenditure on civil administration. Next point, expenditure on general administration. Civil administration, general administration. 7, gifts, grants, donations, all will come here. See, here we are adding grants. Loans, where we are adding? Loans we are adding under capital account. What is the difference between loans and grants? Why we are adding loans under? See, we might be getting grants and loans. We are also giving loans and grants. We may give grants to Nepal, Maldives, Sri Lanka, etc. So that will be added under revenue expenditure. Okay. So why? Why loans in capital expenditure? Why grants in revenue expenditure?
Loans is a liability.
Liability. So yeah. Loans is a liability, so it will come under capital expenditure. Okay, so one more you can write here. 8, expenditure on social security. Expenditure on social security. So here all the welfare payments like old age pension, scholarship, etc. all these are coming under this, all the expenditure on social. But this MGNREGA and all that, will that come here? Just now only you have told that these are developmental expenditures. So actually this will create some assets. MGNREGA, Pradhan Mantri Gram Sadak Yojana, etc. They create assets. So these are capital expenditures. Okay, so this will not come. MGNREGA, all these developmental programs will not come, though they will create asset. Okay, so all the welfare payments like the social security payments, old age pension, widow pension, scholarships, etc. will come here. Okay, so that's about revenue expenditure. Now revenue receipts. Revenue receipts. So which expenditure is better, revenue expenditure or capital expenditure? Capital expenditure is better. Why capital expenditure is better? In case of capital expenditure, assets created, liability reduced. But when it comes to receipts, which is better, revenue receipts or capital receipts? Revenue receipts will be better, I will show you. Because in case of capital receipts, how you are getting? Either you are selling asset or you are borrowing, right? So these two are not considered as good anyway. It's like you are selling your assets to meet your day-to-day life, right? So how long you can sustain and survive? So revenue receipts is better and capital expenditure is considered better. So from the perspective of expenditure, capital expenditure is good, revenue receipts is better. So what are the revenue receipts? Right there, mainly tax revenue. Tax revenue comes around 85%. That's the main source. Okay, so you can do like this. You can divide into two. Just make revenue receipts divide into two: tax revenue and non-tax revenue. Okay, so non-tax we will discuss many things. Tax revenue, that's coming around 85%. This is the maximum. Okay, so close to 85%. In this itself, if you see corporate income tax and personal income tax, these two are the most important. Okay, apart from that, the service tax, custom duty, okay, all these will also be excise. Okay, all these will come around 99%. Apart from that, some other tax will be there: CGT, securities transaction tax. This is capital gain tax, security transaction tax, etc. Many others are there, but this is the major part. Okay, out of this, these two are major: corporate income tax, personal income tax. Okay, now non-tax, when you discuss, first one, profit of PSUs. Profit of PSUs. You remember yesterday we have discussed about resource mobilization. There I have discussed about surplus from PSUs, the profit of PSUs, right? And I've told you this is considerably increasing. And if you remember, I've also told you in budget around what percentage is coming from this. It's a very high percentage, right? Around 2 lakh crore last year. Okay, it was from PSUs only. So this is one of the single most largest source actually. Second one you can write, profit from economic service. Profit from economic service. Economic service means what? Like railways, right? Post, all these will come under economic services. So this one is non-departmental. This is a government company when we talk about PSUs. So here I am talking about railways, post, etc. So this is the largest source when we discuss about non-tax revenue. The largest source around close to 2 lakh is from here, and budget is around 22 lakh only. So close to 10% will come from here. Okay, so profit of PSUs, profit from economic services. Then you can write, these are now small amounts only. So this is non-departmental, right? This is departmental undertaking. Now third one, profit from social services. Profit from social services. So this is actually not that high, like education from the government colleges, health, etc. So these are not that big. Okay, so these are anyway provided for social service, so actually profit is not expected. So this is not that high, but we are writing here, these are the sources. Then you can write okay, non-tax revenue only. Fourth one, interest interest receipts. What do you mean by this? Interest receipts. This is the interest that you are receiving upon the loans that you are giving, right? So we are also giving loans to some small countries like Nepal and all, right? So interest that we are receiving, mostly we give grants to these small countries, but in case if you are giving loans, we receive interest. So that is interest receipts. So actually this is the second largest. 5, the fees, like licensing, license fee, license, etc. Okay, so then you can also write fines, various fines, gifts, grants, donations. All these are non-tax revenue. Okay, then one more is there, S-cheat. S-cheat. What do you mean by S-cheat? It is like taking over unclaimed property. Just right there, government taking over unclaimed property. Now the question is, it is property, right? So asset is increasing. Why then it is coming under revenue receipts? That's the question. Actually here, there is no liability. You don't want to pay back, right? You are taking the unclaimed property. So that is why it is not coming under capital. Okay. So it is a taking over of unclaimed property. So there is no liability involved here. So this is classified under revenue receipts. That is non-tax revenue. So any doubts here related to what we have discussed now here? This structure. So when we discuss about budget, we have to talk about receipts and expenditure. So it is actually the annual financial statement related to receipts and expenditure of the government for the forthcoming year. So receipts on one side, expenditure on the other side. Receipts, revenue receipts and capital receipts. Expenditure, revenue expenditure and capital expenditure. Now all the incoming, that is receipts, that will come here. All the outgoing money, that is expenditure. Now how to know a receipt is capital? You need to check whether asset is decreasing. If asset is decreasing, how you are getting money? You might be selling something. Okay, so that is how capital receipts. That is not considered good. Assets are reducing. Or you need to borrow. So why borrowing is not allowed? Why borrowing is not permitted to meet the fiscal deficit and all? Because it is not considered as good. It is coming under capital receipts. Liability will increase. Okay, and deficit financing will have so much other problems also. Other borrowings will increase the liability. So borrowing is not considered anyway good. So capital receipts is not considered good. Why capital receipts not considered good? Because assets decreasing, liability increasing. So you are receiving money by selling your assets or borrowing. That is not considered good. Okay, and that too in case if you need to meet the day-to-day expenditure, if you are selling your assets, means that is not considered as good. Okay, now when we discuss about capital expenditure, what all things will come there? Here, liabilities, expenditure. So you are spending. So spending for decreasing liability, that means repayment of loan, or spending for infrastructure, nationalization, giving loans, purchase of assets, all these will increase the assets. So this is considered as good because it is creating assets and decreasing or reducing the liability. So this is considered as good. And when we discuss about revenue receipts, we have divided into tax revenue and non-tax revenue. So tax revenue is the major source. So all these, within that CIT, corporate income tax and personal income tax, there is the two major one. Apart from that, when we discuss about profit of PSUs, so okay, revenue expenditure, these are the revenue expenditure, interest payments, there's a major part. Now you can see and you will understand. So these are actually asked as prelims questions before. Which among the following are revenue expenditure? Which among the following are capital expenditure? So seeing this you will understand directly, right? This have nothing to do with assets. So this may be the confusing part, but this you remember that it is coming under revenue expenditure, defense expenditure. Okay, give a heading, budgetary deficits. This is again very important concept. So here we will discuss about fiscal deficit, revenue deficit and everything.